Hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. I am off camera today and we are coming back from a holiday week off. I hope everybody had a wonderful Thanksgiving holiday and is back now fat and happy looking at markets into the year end. We are on the mad dash sprint. December is here, a month left of trading. And we're going to talk a lot about some of the rotation under the hood, some of the new leadership that's happening, some of the vulnerabilities out there in the market that I am sensing, and probably a whole lot more in between. So before we get into it here, our sponsor, Investors Business Daily, shout out to them, IBD. They make the show possible. I've got discount links in the description of this show. First to their IBD digital subscription, which gets you their IBD 50 list updated each day. And then, of course, their flagship charting platform, Market Surge. I'm using this every single week. You can track and find your favorite stocks here, do some analysis. Market Surge, we've got discount links to both in the description of this show. Now, in terms of markets, the big catalyst that really we're going to talk about here in terms of what the market has been paying attention to, it's the Fed. And the Fed here is set to meet next Wednesday. These are the current latest expectations. 87% chance here that the market is pricing in a rate cut. If you recall a month ago, 3 weeks ago, this was a lot more of a coin flip. In fact, there was actually, just a few weeks ago, it was pricing in that the Fed was not going to cut in December. And that was when we were in more of a pullback and uncertain period. Now, of course, we've got a little more econ data that has come out. We've got some, comments out from the Fed as well. And the market is largely expecting now a cut next week. But of course, what does the path look like? What is, on the horizon here? A rate cut is great, but what is the next one, right? The markets are always addicted to the next catalyst. So we'll see what we get. That's going to be front and center on Wednesday. If we take a look at the scoreboard here on the week, you can see it was green across the board. The Russell 2000 was the leader for some time, and then it kind of pulled back, and the NASDAQ looks like it kind of eked out here at the end of the week. But largely, it was positive across the board, and volatility really sort of coming out of the market at a pretty fast pace. We'll take a look at that. If we look at the sectors specifically, technology and energy, those were your top two performers. You haven't really seen those two in the spot there. Energy's been something I've been talking about, been posting some charts. I do have some exposure here in XLE. We'll look at that a little bit later. And utilities was hit really hard. This was a big down week for utilities. It was a up week for interest rates. We'll talk about that as well. But that was a pretty alarming unwind there in utilities, which have been really strong this year. In fact, we're almost beating the NASDAQ at some periods here for performance. Now, in terms of our smart trend filters looking across the sectors, you can see lots of green here, right? Utilities, not green, right? They're in a downtrend confirmed. And if we look at real estate, it is kind of mixed and choppy. Everywhere else, though, is pretty much in an uptrend here. Take a look at biotech. This is another sector, again, kind of, leading into all the things we'll be talking about here. I mean, this has just been uninterrupted, unapologetically up. Biotech is a very hot space right now, and it's continuing this week. In terms of relative strength, I don't think I have too much to say. Not a whole lot new here in terms of the dominant trends. If we take a look at market breadth now and we look at 52-week highs and lows, we're starting to see more stocks hitting 52-week highs. That is encouraging. If we're looking at the percentage of stocks over 50 SMA, that is rising, that is, inching up. That is good. That shows that there is some breadth here under the hood. It's not just the Mag 7. Now, let's get into some individual charts here, and let's start looking at some of this price action. Here is the S&P 500. We'll go to the cash settled market. And you can see that we had a good rip here off of these lows, right? We were talking about sort of the vulnerability of the market back down in this area. This was the NVIDIA earnings day, this big bar you see here, right? This was NVIDIA reports blowout numbers and the market sells it off and engulfs, but there was no follow through. We still could not crack this very, very magical level in here around 65.50 or so, 65 and a quarter. And the market market's found its bid and it just kind of floated back up towards highs where we find ourselves now. So S&P is still largely range bound since, or underneath the highs, I guess, since about a month and a half ago, which was just late October, right? And so we're back to the top end of this range. We spent the holiday week and the early this week here digesting sideways. We started to break out Thursday, couldn't really get it going. We tried to break out here on Friday, but it's sort of a failure and just kind of, more sideways action. So we're very much at a bit of a decision point here as the market moves back up into the top end of this range. I think you can pretty clearly put your levels here between, call it, that 6,550 to 6,900 is the range right now that is active here for the S&P 500. And of course, now this is a fairly seasonally positive period for markets, right? This is the old adage of never short a dull market. It gets pretty dull typically as these holidays start to roll around and we get into the depths of winter. And so we, are kind of like looking at the dominant trend, which is up, turning sideways to set our direction and bias for perhaps this end of year. Now, if we look at the NASDAQ 100, we have a pretty similar picture here. And if we look at these ranges, once again, you've got kind of this low here that ended up holding around 590. We talked a lot about that right in here. I was not expecting it to hold for another test. I figured we would get some type of washout here, and that did not happen. We got the sellers to sort of evaporate here, and we've been clawing back higher. Now, a couple of things to note. One, we finally got back and pretty much filled this gap back here from November today, which was nice to see. Notice we do have that wick up here as well and kind of some reluctance to find follow through into the weekend. But generally speaking here for the NASDAQ, we are range bound, I would say, mostly sideways for the past couple of months or so. Haven't really made a tremendous amount of progress, and we're going to kind of wait and see here. To be really bullish on this market, I think you want to see these highs get taken out with some authority, as we kind of crawl our way back up here on light volume, right? With a lot of uncertainty here. It's just not as convincing as we start to move back up here. And, this is going to be an important kind of week coming up here because we want to see just, does this turn into, imagine this being a lower high. Imagine if this was the high here, we couldn't get back up to highs and we start cracking a little bit next week. It sets the market up for some vulnerability here if this slow kind of grind comes to a halt, reverses, and then we don't get all the way back up and, challenge or retest more convincingly these old highs. So that's kind of the bearish, pessimistic scenario that, we could see. But again, for now, the prevailing trend is still up. Bulls should be, given credit for the progress they have made this year. And they managed to, kind of survive again around this 590 area. And, we're kind of just in wait and see mode. The Russell 2000, sneaky new all-time high made this week. This is a monthly chart now going all the way back. Really, these highs were kind of set originally back in 21, if you could believe it. And then we sort of topped out in late 24, had a big pullback. Of course, this was the tariff temper tantrum. And now we're kind of all the way back up here. So the Russell 2000, certainly looks like it has more energy and more thrust behind it. And that does sort of, align with some of those breadth measures that we were looking at earlier that's showing that rotation into some of these other sectors. I got to say the NASDAQ 100 just feels more tired, right? And if we, kind of skip and just run right to, now we'll look at the Mag 7 stocks later, but if we, let's look at it now because it's timely. When we look at the Mag 7, which is really dominating the weight and activity there, of course, in the NASDAQ 100, I would say, Microsoft here on the left-hand side looks terrible. Amazon looks terrible. NVIDIA, pretty terrible. Meta's terrible. these are your top three right here on the right hand side, right? These are kind of strong arming and pushing the market up. You got Tesla, which is now back to resistance, and so we'll see if it can kind of clear through some of this supply. I do like Tesla. I like it as a story and a narrative and general sentiment, but price action wise, we just want to see if that can actually break out. Google's been remarkably strong. Apple's been remarkably strong. If these two start to falter, then again, it just feels like the cues could get more heavy. So I am not really bullish here on the Mag 7 and the NASDAQ. I much rather see things like energy, which again, reversed and had a really bearish looking session here on Friday, where we're trying to get this breakout to happen, but energy is just making this as painful and long as possible. This is a weekly chart of XLE, and you can see it's just been remarkably sideways, remarkably complacent, and we are now back towards kind of this top end of the range here, and we are still finding trouble to break out on energy. So XLE, I do have a position here, trying to get some rotation, trying to get a breakout and some momentum to happen, but Friday is certainly not an inspiring session, but I'm going to give it the benefit of the doubt right now and stick with this trade for the time being. So energy is one of those brighter spots and kind of rotation area. If we first, before we start going into more of that, let's look at the VIX real quick just to round out the general market. I mean, the VIX is on just like a multi-week slide here. This was as high as 25, again, in some of that rate cut panic and some of the AI panic in here. And then that has all just evaporated the VIX back to about 15.4, which is going to be pretty much the lowest close now in a couple of months for the VIX. So that is, I suppose encouraging if it can stay down there, but it's certainly depressed in a very straight line. So we'll see if it can hang down there. GLD getting back towards its gap area, putting in some sideways here. This is going to be an important range to see how this moves. Everything, again, on Friday here now looking like it kind of rejected and reversed lower. So it's again kind of set up here of, do we see follow through lower in GLD? Do we see follow through lower in XLE? Do we see follow through lower in the SPY? We're setting all these kind of charts up for early next week to see if the sellers can actually make some progress down. If we go to Biotech, which is another very strong spot, been posting charts about this on X, talked about it a couple of videos ago as well. This is a remarkably complacent, just consistent uptrend, not a tremendous amount of froth. We're pulling back. We're kind of grinding up. We're not letting any big entries in on any big pullbacks. We had a small, 2-day dip to start this week off. That was it. Got bid back up, and we pretty much closed at highs. So Biotech remains remarkably strong. IBB, XBI, you could look at either of those. And then, of course, I can't, not say anything about silver. Silver on the weekly chart up 3%. Last week was up 13%. All-time highs for silver. Big volume coming in. It's extended, but it's working. It's got some good structure to it. And right now, that's where the momentum in interest rates finds itself, in commodities rather. But going to interest rates, that's why I said it, is because I want to make the switch here to trading view. This is the 10-year Treasury, 10-year government bonds, back up to 4.14%, back up to multi-week, multi-month highs. We are far away now from that 4% or sub 4% area. In fact, when we look at the 10-year now, this almost looks like it's kind of a bottoming pattern that's forming here. And if we get a push over 4.15, 4.18 or so, then we are back in breaking structure, back in a more definitive sort of uptrend. So we need to pay attention to this. Again, we're still range bound. We still have, generally speaking, a longer period of downtrend in place, but we are getting to a point where we have to pay closer attention. And again, if interest rates start to break out and we see volatility start to come back, then S&P, the Qs falling back down towards the lower end of those ranges all sort of makes sense. Now, maybe there's some overseas pressure, the Japanese bond market, JGBs, are, nonstop, and that could be just putting some yield pressure here as well. But there's something going on here in credit markets where, yes, the Fed might be cutting, and this is more on the meteor side of the duration curve, but this looks like it wants to go higher. So that's kind of the read there. I think on lots of areas I wanted to talk about. XLE, right? Obviously, don't love today's action, but XLE I still think is interesting. Here's what USO looks like right now. I know it's drill baby drill time, and we've got some tension overseas and in Latin America. But if this can start to break, natural gas, right? If this can start to move, look at the volume coming in here on Friday on natural gas. Some of these energy stocks could be in an interesting spot. Like I said, I still like biotech. I still like, even to a lesser extent, solar. I still like solar as well. And I'm less excited about things like the NASDAQ 100 from a tactical trader perspective. Now, again, this is where time frame matters, because if we go back to our core portfolio here, our Galahad trading system, one of its largest position is still in the NASDAQ 100, right? As it should be, right? For a longer term system like this. Galahad unless today gave it up, is at all-time equity highs. It's having a great year. November performance is in, 12-month performance still going strong. So it is enjoying the uptrend. It's enjoying NASDAQ exposure, and it should be as a long-term system, but as a short-term tactical trader, I'm just a lot more uncertain about wanting to put any more chips in that area of the market. And I do want to talk about Quant Rockets, but I want to talk first about Bitcoin, which I missed. Bitcoin here, let's see if we can just pull up. This is still trading in a very rough, sloppy formation. Again, I still think, and I know this is now getting a lot more popular, but tracking the ratio and the correlation and the deviation of Bitcoin relative to Qs, this is just streaming south. And yes, there could be there is some idiosyncratic risk with Bitcoin that are specific factors to just the Bitcoin, but I still think this is shouting some type of warning here that the NASDAQ and broadly equity markets could start to catch down to Bitcoin. It's still my default assumption. I did put on that IBIT QQQ trade that I talked about right here. Let's see if I can pull this up. On this Friday, and it hasn't really worked out at all. Now, I did trade around it. I did sell some Bitcoin on this pop. I did end up buying some MSTR the other day, and I'm playing around with this ratio. I still have this trade on, but I am now a lot more on the short side. So I have more QQQ short on against the Bitcoin and MSTR. So we'll see. But Bitcoin to me still looks kind of terrible. I consider myself a Bitcoiner. It is pretty much my largest position at all times. But from a tactical trading perspective, our Galahad model, we just haven't been involved in it. And I think there are motivated sellers as this price goes up, and we are basically seeing it this week as it didn't really get a big clean follow through week up. So Bitcoin is still kind of struggling here, and that's kind of the read on it. Let's finish off here with Quant Rockets really quick, because it had a pretty good week of trading, and I want to highlight a few of the stocks that are on my favorites list. So COHR, number one here. So this continues to work higher. I know there was some announcements with their new silicon carbide platform for AI data centers and all that, area segment, and I won't pretend to be an expert there, but the market loves it, right? And this stock continues to trade up. So this continues to be a nice winner for us. We've been in it for some time, so it's a little more extended. Some of the more actionable, some of the newer names that hit the list. First is Carvana, which is, everyone's hated company or stock, and it continues to move up. Look at this string of green days that have come in here. So we are back in this trade. This was something that we got back into recently at the start of the week at 362.08. Our track record on Carvana is very strong. So our batting average isn't that great. It's basically a coin flip, but when Quant Rockets gets involved, it really, seems to pull out some big winners. So we've had some good historic profitability there. A new name that I posted about on social as well was Webull. First time I've ever traded this stock. It looks terrible from its IPO, right? I mean, this is it. But our model here is picking up a change in momentum, right? And so we got involved in this earlier in the week as well, which seems to be doing pretty well so far. Again, I have positions in pretty much all these trades I'm talking about. And Reddit. Reddit is another one we added this week. It looks like it's trying to break out pretty nicely here. It had a good pullback from September, October timeframe, got its act together, good kind of base, and now it's heading higher. It's a great looking pattern. Again, I own the stock. We're involved in it. And these are the types of names and momentum signals that our Rockets platform is highlighting. So again, two models here. We got our long-term kind of all-weather portfolio, which is designed for large accounts, buy and hold replacement exposure. And then here's your tactical trading that you're looking for opportunity and big winners. This is our Rockets platform. Check them out. We got links in the description of this show. Both having great years, and hopefully subscribe. I think that's it. I think that's everything I wanted to talk about. So again, never a dull day, but some rotation under the hood. Spidey sense is still, kind of picking up here that Qs could be at a vulnerable spot, and there could be some rotation afoot. But again, it is that holiday seasonal time, so be careful trying to short a dull market. Always have something on the other side. Yes, I do have some tactical Qs short exposure on, but I am still net long in that portfolio, right? Like I still have long Bitcoin, I still have long energy, I still have long Quant Rocket stuff. So I do have short exposure in this, but not naked, not aggressive, and not my entire book type of thing, right? So that is it. Hopefully you enjoy. Check out those links in the description. Hope you had a wonderful holiday week again, and we'll see you back here next Friday. Take care.